Stream should be up. Everything should be good. Give me 1 second to drink some water and we can start talking through today's stuff. Okay. VIX is now down on the day. What? What a ridiculous day. I walked away. I just straight up walked away from the charts. I didn't want to sit here and obsess over these moves today. We talked about this inside of Discord, kind of talking through the expectations of what we have as a group and what we can reasonably expect from the market. And one thing I want to point out for those of you that weren't here for this conversation, first off, let's tag the group, make sure everybody that wants to get on is on. I posted a chart earlier. If you were here and you saw this, please don't say anything. If you weren't here, I want you to take an honest crack at this, okay? So I'm going to go ahead and post the chart. And I want you to ask yourself, do you expect that to go up or do you expect that to go down? Don't worry about what the chart is. I just want you to think to yourself, from a technical standpoint, do you expect this to go up or go down from here? And then the next chart with a few levels charted, what would you expect, down or up? And most people said they expected this to continue down. Said that it makes sense that, for those watching the stream, it makes sense that we would find support at the 200-day moving average, but we have a series of lower lows. We are breaking horizontal levels. If we extend this level over here, we are breaking levels that were previously resistance and now they should be viewed as support. This makes sense that we are finding support at the 200-day moving average, but the trend is very much down. Series of lower lows, horizontal levels being broken, etc. So if that's the case, what I did was I sent you guys the inverted chart of the SPY ETF, right? The S&P 500. And what I was trying to accomplish, and what I think I did a decent job at, was to get you out of the mindset that the market is going to fall. Because by inverting the chart, it didn't work on Mike, but supposedly for everybody else, they didn't immediately identify this as SPY. They said, yeah, I would consider this to continue its bearish downtrend. Well, the chart's inverted. So when you flip it back up, obviously it's in an uptrend. What would you expect? Well, if you expected the previous inverted chart to be in a downtrend and to continue down, then you would expect the inverse of that chart to continue up, regardless of what the ticker is. Now that you know it's SPY, you tend to understand, like, okay, we have our gut feelings about the market. We're constantly inundated with media, social media. Everyone's screaming the recession, the dollar, blah, 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 blah. Fucking yield curves, dark pool indexes. If you strip away all of the garbage and you focus on what is important as a technical trader, which is price, right? You know that the direction of the secondary trend right now is very much up in the major indexes. You have horizontal levels that we are breaking to the upside. We are finding resistance at a logical area in the market at the 200-day moving average. And just like Mike said and everybody else said, they would expect some support on those inverted charts at the 200-day moving average and then potentially a breakdown. It's reasonable to expect that we would find resistance at the 200-day moving average before a break up. RSI is still above the 50. It's been above the 50 since July 18th. We're going on a month straight of trending above the 50 moving average, or the 50 RSI rather. I mean, this is important stuff. And so the last thing we talked about regarding this is it really teaches you by looking at the inverted charts and not knowing the ticker and then me telling you this is SPY inverted, flip your bias, and it remains the same, right? If you're down, if it was inverted, up if it's not, all of a sudden you realize that a lot of the negative emotions that we feel about this uptrend do not coincide with what the chart is telling us. We are being influenced by other people's emotions. And that actively sabotages what you tried to do in the market. Not what we do in here, but you specifically. If you are looking to avoid other people's drama and their opinions, understand that if you feel like the S&P 500 has to fall, but on those inverted charts you said, yeah, this chart looks like it's going to continue to fall, understand that that's not your technical analysis telling you the S&P 500 is going to fall. It's the opinions of others that are pushing the crap into your head. So try to stick to your guns. It's hard, obviously. You can't just shut everything out. But understand that that is a negative bias going on inside of you right now, because I just proved to you, at least for most of you, that you expect this chart to continue to the upside, and it's taking a break at a reasonable level. We didn't do it with the Qs, but the Qs also have the same sort of idea going on, right? Taking a spot at a logical level. Saw this posted earlier today. David Cox. We're not a big divergence group. Statistically, they just don't play out well, specifically in bull markets. Not that this is technically a bull market, but they just don't play out well. And but he did point out that there is a slight divergence on the Qs. You can see that the RSI is damn near horizontal, whereas the price is hitting higher highs. That is a bearish divergence. And at the very minimum, he said, listen, I'm not saying there's going to be a reversal, but I am saying that it does make sense that the market's going to slow down a little bit and digest some of the move, considering we just shot up on the Qs yesterday, peak. We just shot up 24.5% in 61 days. That's not normal for the Qs. All right, so yeah, it makes sense that we're going to get some consolidation, potentially a minor pullback as they digest the moves. But this secondary trend is still very much up, and we are still very much breaking horizontal levels and attacking 200-day moving averages from the underside. This is what needs to happen in an eventual bull market, right? We have to come out of the bear market eventually. The other thing that we talked about that I don't have a whole lot of, I don't particularly believe in max pain theory. I do know that the market tends to punish overzealous traders, and it's a construct of the market. The market is essentially just a gigantic think tank filled with human emotions. That's it. Buyers and sellers at every price. And it tends to screw over a lot of people. Having said that, I don't necessarily believe in max pain theory. But I will say the market is coming into some levels where it makes sense to have a pullback. We're also after the end of the session, we have 2 trading sessions left before the August monthly contracts expire. And for the last 60 days, we've essentially done nothing but go up. And so it has rewarded people seeking risk, right? Risk being on the long side in a bear market, in a downtrend. Those August contracts, if you would have grabbed them at any point in the last 30 days, should be up very large. Does it make sense that the market is going to find some resistance at these logical levels and potentially punish some of those monthly contract holders that maybe bought late? Maybe they bought yesterday or the day before. Maybe they bought at the beginning of the week in some relatively underperforming sectors and industries. Yeah. I think there's fuckers out there that would definitely appreciate that. So it doesn't surprise me to see a pullback. Doesn't surprise me to see some red. Wouldn't surprise me to see some red through Friday. But luckily for us, not a single person in here is trading an August contract. And so as long as we are continuing to respect our support levels and not hitting our stop levels, we should continue to try to remain optimistic in the positions that we have. Stick to the original the plan here. The Qs here recovered nicely off of the lows, but it hasn't been a great day. We are coming down over the last, looks like 20 minutes, 25 minutes, 30 minutes. We're almost up towards break even, but we did draw back down. I don't know if there was some news that came out about 10 minutes ago. SPY as well. SPY was almost up near break even, but both of the major indexes pulled back. It has to be something that was being being said, I don't actually know. Let's see if I can see on the old Twitter stuff. No, I don't see anything over the last 30 minutes that would impact headline-wise what's going on. British billionaire Jim Ratcliffe wants to buy a stake in Manchester United. I don't think that's why. But okay. So market pulling back, like I said, I wouldn't expect it, or I would not be alarmed if it pulls back into Friday, to be honest with you. So before we go through any scans, does anybody have any pertinent positions or questions that they need to be addressed? Anything? If not, we can move right into the scan portion. Gonna look through Koyfin really quick before. Quarter to date chart. I'm gonna update all these really quick. I'm not gonna post them in Discord. You guys have Koyfin, and we're gonna look at these tonight. Long story short, XLY up 24.69% after peaking yesterday at 25.81%. So a slight drawdown today in XLY. Second straight drawdown, second day straight of a minor drawdown in XLK, still up 18.11% on the quarter. Both of these very much in the lead. XLY up 6% on top of tech though, and I'm going to assume that a majority of that is retail related. XLI up 1416, XLF up 1318, and then there's SPY. So everything underneath SPY this quarter has underperformed, but every single sector is green. So sectors of overperformance: XLY, XLK, XLI, and XLF. No particular sectors look terrible. XLV, or healthcare, is underperforming. And yeah, everything looks okay. From an industry standpoint, quarter to date here, PBW still up 32.47 after peaking at 41.81. So 3 straight sessions of some relative drawdown in PBW, still very much in a strong uptrend, but could be changing within the next 2 trading sessions. If we close below that 30% on Friday, if we give up another 3, 4, 5, 6% on PBW, we could be looking at our first lower or higher low rather, or could be coming down into a previous higher low, I should say, which could threaten this uptrend in PBW we've seen over the last, 6 weeks. XRT, once again, is the second performing industry quarter to date, and you're going to see that directly within the consumer discretionary ETF XLY. So retail is carrying XLY right now. TAN, along with clean energy, third straight drawdown, but still in a very strong, healthy uptrend. Let's see here. XOP, we talked about potentially looking at energy names. XOP is up 15.72%, which is over SPY at 13, and it's in an uptrend. So I'm looking at some of these other names that are up higher than XOP, and they're starting to curl over a little bit. For example, XME, your metals and mining ETF, is up 16.92% on the quarter, but for the last 4 trading sessions has been in a drawdown. SMH for the last 3 sessions is in a drawdown. These are not breaking their uptrends, but they are drawing down over the last few sessions, whereas XOP is actually still showing a strong uptrend. There's something there for XOP. We should definitely be looking at that. I think that's where we're going to start today. I know we talked about it earlier today. We can scan it as a group. Really quick factor analysis. IWO still in the lead, but it is drawing down. It did peak 3 or 4 trading sessions ago, up 0.6 or up 6.08 rather against SPY, now up only 4.39. So some minor pullback in small cap growth. Large cap growth is range bound, up 4.33. No real movement there. IJK is your mid cap growth, rounding up your top 3, up 3.96. So growth, slight relative underperformance over the last 3 trading sessions. Large cap energy not doing anything, mid cap, or large cap value rather, mid cap value not doing anything, and small cap value actually in a relative uptrend now. So we're starting to see those small cap value names start to perform a little bit better. Probably has to do with XOP and OIH. Any questions regarding the Koifin stuff? I think we should be updating our energy related stuff right now is probably where we should start. Pull up the Polkowski blog, see if they posted. He did. Okay, so here's our Wednesday, August 17th breadth stuff. On Tuesday, 47% of stocks in his database were in bear market territory, which means down at least 20% from their one-year high. A week ago, it was 58. We are now officially on the other side. We now officially have less stocks in his database that are in bear market territory than bullish. Look at that. The fewest was 20% on August 27th of 2021, and the most was 79% June 17th of 2022. So almost an entire year between the fewest and the most. Looks like 9 months, 10 months there. As of today, only 47% of his stocks are in bear market territory. A week ago, it was 58. The 453 stocks in his database are down an average of 21% from their yearly high. A week ago, it was 25%. The peak was 12 on August 27th, 2021, and the bottom was 33% June 16th. So look at that. Market breadth improving still substantially, like a lot. I think the big thing here is only 40% of the stocks in his database are in bear market territory. And we were having this conversation 4 weeks ago, and this number was at 68%. And we were like, hey, 68 is better than 79. We're turning in the right direction. We should start to go long. It's worked in our favor, and it is continually working in our favor. So a week ago, 58. Yesterday, 47. That is improvement. Every single week we have been on this, so congrats. At the end here, it says that the prior chart is bullish, and so is this one. It suggests there's more room to climb, but after climbing in a straight line higher for so long, he expects a retrace. I don't know when it's going to happen, but he believes there's going to be a retrace, and we tend to agree with him. Trends don't just go straight up, and if they do, they're unsustainable. We expect a pullback. We're not worried about these. This is why we buy time on these plays. Any questions regarding the breadth stuff? Drink something really quick, and we'll hop on FinViz. Start with a fresh scan, FinViz, 50-day highs. We'll start there. We know that we want to be looking specifically. We should at least be updating our charts in energy, right? So we're going to scan for everything, but when we run into the energy stuff, we definitely want to put a little bit more oomph on them. A considerably thinner list than usual. We've been seeing massive lists, 200, 300, 400 tickers at a time. We are seeing 87 today. So definitely feel the pullback here. Let's see what we can find. Ian posted earnings from GLBE this morning. Or was it yesterday? It is up a second day. This is a retail related name. I think it's China, if I'm not mistaken. Looks like a potential COD. So this is something that we're not going to be trading this now, but I'm going to post it. Potential COD there. H&R Block, another 50-day high. Tired of posting it. I'm going to stop posting it. Did Landon close his low position? Anybody know? He's not on right now. Low recovered well today into a 50-day high. Got beat to shit under the 200-day moving average, but it's still up 0.81 and it's moving in the right direction. So steadily above the 50 RSI. RSI is still peaking. His price is peaking. This looks like a fantastic chart to be long, and I think he's hopefully still long. Let's see. Some Staples names are running, right? Staples. McDonald's pushing up near all-time highs. Not something we want to look at till we're above 270, but currently sitting at 26679, so we're pretty goddamn close. Another day at Party City. Another day at TJ Maxx. None of these are at buy areas for us, though. Actually, I'm going to pull up TJX one. Got a BRB on TJX this morning. Nobody took it, which is fine. I did not know TJ Maxx was an $80 billion company. I'm going to post the setup. Isn't that the worst thing, by the way, when you're not looking at your charts and somebody tags you and they're like, yo, did you still long this? And you're like, oh my God, what is happening? You start shaking. You can't pull out your phone fast enough, or you can't pull up your broker fast enough to like see what's going on. Anyway, TJ Maxx, if this play does not pull back again, this is a chart that we're probably going to have to study because we missed this. We got the pullback yesterday, or we got the pullback this morning, rather. Very solid setup above the 50 RSI going back to the middle of June. So this is a missed opportunity, up 3.39% today. I would not expect a pullback on TJX. This is a strong retail name off of good earnings. How about the Pepsi play? All-time high today, reposting it. Did anybody ever end up getting Pepsi or not? I did not. I was waiting for a larger pullback. I think most of us were probably waiting for the pullback to 176.5, 177, and we didn't get it. We got 178.64. Callow's typing. If somebody got Pep, let me know, because it all-time high today. I just want to add it to the TTI positions watch list if we did. I'm going to keep moving though, but Pep looks good. Walmart, another 50-day high. You forgot about, yeah, I didn't forget about it, but didn't pull back enough for me to get in. Campbell's Soup up near 50-day high, 100-day high at this point. Yeah, up near 100-day high, Campbell's Soup. This chart looks terrible. Okay, here we go. We're getting into the energy names. So we were looking at energy names earlier. Here is an all-time high from a mid-cap with a 3.76 ADR. What do? Don't ask me. They are a marine shipping name within the energy space at all-time highs. I doubt the chain is going to have a lot of opportunity. About zero opportunity. So this is probably going to be a puzzle piece trade, considering it's at 1677. Obviously, if you want to buy shares on this, feel free. It's in a big blue sky environment. Price discovery, nothing to the left. 3.185 billion at a 376 ADR. Not the worst idea. Up 5.84% today and hitting its ADR today. So strong move regardless of whether or not we buy it on EURN. I think it's more of a puzzle piece trade though, right? Why the hell is this mid-cap marine shipping name that apparently has ties to XLE, why is it up 5%? We're going to start getting into some small cap stuff. So this is the shit that we were seeing with the small cap value stuff. Obviously IWN, if I'm not mistaken. IWN is showing relative strength over the last few trading sessions against SPY. It's not bucking the trend for large cap though. Large cap value is still in a relative downtrend or horizontally channeling, but small caps are showing some slight relative strength. FRO, I don't know where you'd want to buy this, and earnings is coming up. So I don't think this is an opportunity, but it's a $2.5 billion, another marine shipping name. Okay, so we're getting some confluence here with marine shipping names up. This one's up 7.43%. I'm going to post it in Discord, but I don't think there's an opportunity to trade this unless it's shares. And even then, I think I'd prefer EURN over FRO. Surprisingly, there's a lot of open interest on some random strikes for FRO. Probably insider knowledge or a hedge. There's around 4,000 open interest on the $12 calls, and they're only $1.47. So you're getting in the money calls for $1.47 with a 57 IV and an ER coming up. That's interesting. I don't think I've seen, in a long time, I don't think I've seen an in-the-money call that's this cheap with this IV this close to earnings. I did look at MANU earlier this morning because of the Elon Musk stuff, but 36,000. Kidding me? On the September 14th.
The day before he tweeted that, someone bought 31 days out.
Yeah, I saw it. I saw it on Twitter. Somebody was posting about it. That's funny. Okay, so FRO, EURN, both within the same industry, both energy-related marine shipping names, both hitting highs. And FRO has some unusual, I'm going to type that out, FRO, unusual options activity on those strikes in the money. And they're cheap, so something that we'll go over tonight during our strategy session, potentially. GLNG is marine shipping, I believe. We've looked at this before. Huge breakout over the last few sessions. This thing's up 25%, but no entry here on GLNG. It's the third marine shipping name linked to energy that's up huge. DHT, I believe, is another marine shipping. It is. So all of these names are running in tandem. What was that ETF we used? Boat. Where's Boat at? Boat's right there at that pivot spot that we used previously to go long. So Boat is right there again. Global shipping ETF. We had, I mean, the level's very obvious, at least to me. Anything north of this is bull. Everything south of this is bear. We've traded a few marine shipping names this year. Zim, Starbulk, both of those were winners. Bunch of marine shipping names hitting 50-day highs, though. So obviously there's something going on there. Okay, let's keep moving, though. Hopefully we'll find some. I think that's is that the end of energy? Maybe that's the end because of the change from open up, but we'll dive into XOP more tonight during the strategy session. Progressive did not report earnings today, and they are randomly up 3.64 off of an ADR of 1.76. So there's a 2x ADR move on Progressive Insurance. Also, this is an all-time high. We give Mike props all the time for buying AMD back in like the 2000s era. But I do want to point out that over the last 12 years, Progressive has like 700% stock. It's pretty ridiculous for an insurance company. By the way, feel free, you guys have any questions about stuff regarding current positions, just butt in and we'll go over it. UNM was a trade that we were looking at potentially taking that never gave us the pullback. This is another 50-day high today. Puzzle piece, unfortunately, we didn't get the pullback, but this is another insurance company. Going to get a bunch of biotech stuff, I'm assuming. But we are staying out of biotech for the time being because we already grabbed the stuff that we wanted. At this point, everything's going to be so far overextended, it's not even worth chasing. I see some old school names that we day traded in 2020, though. EAR, for example. EAR. I remember day trading this with Mike and JJ and Ian. Up 54% today. Yeah, why not? Why not? ADP, another 50-day high. Waste management. Elephant in the room, Apple. got beat down today, but at its peak, Apple was only down 3.5% from all-time highs. At its peak today, Apple was down 3.5% from all-time highs. Just want to point that out. And the rest are utilities-related names that I do not want. CEG, let's see what CEG is doing. Not giving us the pullback that we want. Okay, that's it. That's the scans. There wasn't a whole lot to it. Tonight's session is probably going to be energy-focused and going over positions that we are currently in. And other than that, it should probably be a pretty light session. You guys have any questions about anything? We can talk through some positions that we closed over the last two sessions. Callow said he closed his Walmart play, both of them. One play he closed for 200%, and the other play he closed for 100, if I'm not mistaken. So Callow's officially out of Walmart. Alex, did you close your Starbucks? Cool. What was the end percentage on that Starbucks play?
It was, I believe, 100, just 101, something like that.
101%?
Yeah.
Sweet. Sounds like you got your first post, buddy.
I think I left a lot on the table, though. Like, I'm not too happy about it, but, it's a win.
What did you expect?
Nothing really. It's just I was kind of hoping for that $90 profit target, but I didn't get it. So
you got pretty damn close to 90 yesterday, right? 89.93, I think it says.
Yeah, I got pretty close. Yeah.
What were the expirations? September?
Yes, I did have the September. I think it had 30 days left.
Yeah.
A little less? I don't quite remember.
Yep, got it. Good trade either way.
Mm-hmm.
I think we got 30 days left on these plays right now. If you're in September's. It's got about 10 days before Theta starts kicking in.
Yeah, only position I have now open is ON.
Sweet. Actually, we can look at ON really quick because I was typing about it. ON, awesome recovery off of the low today, and we are above the previous breakout spot. We're right there, right? Previous breakout spot was 68.50, currently at 68.57. Honestly, this would have been the best place to enter ON. Unfortunately, though, grabbed it yesterday and the day before, so on pullback still. But yeah, this would have been this is the BRB pullback that we wanted with ON. Unfortunately, I think people were buying in too early, and obviously there's no way to know that for sure. But today would have been the perfect day to buy ON, because if we do gap down tomorrow, you're out for that minor loss. I typed up a BRB thing on Twitter. You guys all know that stuff, but if you're watching the stream and you're not in TTI, you can read through that, and ON is one of the examples of buying a pullback in a strong breakout. Speaking of Twitter really quick, I'm going to read you some stats really quick from the BRB. Mike and I talk through this all the time, but for those of you that don't know, I'm just going to blatantly read the stats. Over 8,000 trading setups from July of 1991 to May 2011, which only included rectangles, double and triple tops and bottoms, because they have a defined breakout area, right? It's a horizontal level. You get into things like inverted head and shoulders. They can be diagonals. If you look at any sort of real triangle, there's going to be diagonals. And so every trader can interpret their breakout spot a little differently. With a rectangle or any sort of horizontal level, there is no interpretation. The breakout is the breakout. So 8,000 trading setups spanning 20 years, only including those. Price increased 37.6% on high volume breakouts and 35.8% on below average volume breakouts. So high volume breakouts did give an edge, but it was only 1.8% difference. So if somebody says, look, there's a high volume breakout, next time you can say, well, statistically speaking, it doesn't really give you that much more of an edge, which is funny because Mike and I were talking yesterday about why doesn't JC Perret have volume on his chart? Remember the conversation Mike and I had? Does volume really matter? For us, yeah, because we take advantage of the next stat that comes after this. But in the grand scheme of things, if you're just buying breakouts or breakdowns, volume doesn't matter unless your edge somehow relies on that 1.8% difference on average. So volume might actually be the least important factor for swing trading. Failure rates were significantly different though. So his measurement of a 10% failure rate was a price move of less than 10%. So if you get a breakout and it doesn't move 10% at least, that is a failed breakout in Bukowski's mind. 14% failure rate on above average volume breakouts. So 14% of the time, the stock does not hit 10% or more and then retraces. Only 5% failure rate on below average volume breakouts. Okay? So below average volume breakouts, 5% failure. Above average volume breakouts, 14% failure. That doesn't seem like a big difference, but over 100, 200, 300 trades, you realize that high volume breakouts have a 2 times more likely failure rate than a low average volume breakout. And we can kind of understand why from a trading perspective. You see high volume breakouts. What does it normally attract? People specifically just playing that breakout, maybe a 1 day or an intraday trade. The kind of, I don't want to say the worst types of traders because that's not true, but like maybe the newer traders where the only thing they know how to do is scan for breakouts, right? So just maybe these sorts of environments kind of attract the newer trader, and therefore they're caught up in this stat of buying bad breakouts and stuff. Certainly could happen. So understanding that it's 2 times as more likely to fail, which is not hit 10% or more on high volume breakouts, matters to us, right? Pullbacks were also significantly different. Throwbacks occur 57% of the time after an average volume breakout. So Mike and I say 60 or 66. It's 57, but we're in the right area. 57% of the time you get a pullback off of a high volume breakout. Throwbacks occur only 18% of the time on low average volume breakout. I think of how big of a difference that is. More than 50% of the time, a average or a high volume breakout pulls back into the level that it broke out. And only 18% of the time does a low or a below average volume breakout pull back. That's why when Mike says, well, this thing broke out today, but it has less than 1 RVol, like we could try to play this as a BRB, but we're probably not going to get it. You know now that there is an 18% chance of a pullback. So from a trading perspective, you can prepare for that. If you do get that pullback, if it does hit that 18%er, take it. Why not? But understand that when Mike says that, or when I say that, like, don't plan for it. Like, I shouldn't say don't plan. Don't expect it, because statistically, you're not going to get it, right? 82% of the time, it's just going to continue in the direction of the breakout, and you're going to sayonara. But those the above average volume breakouts, 57% of the time do pull back, and that's what we should plan for and expect to happen. Flip a coin enough times, and the edge is going to be in our favor. So we should be looking at every single high volume breakout as long as it matches up with our sector and industry analysis and stuff like that. Any questions regarding any of that? That's why this shit matters. There's no other real group that I see teaching something like this that has statistics behind it. So there's an edge there. This is also why Mike says that this is probably, and I agree with him, our A+ setup. We have a few different setups we run in here, but the BRB is probably the highest performing setup. Actually, it's probably, I shouldn't even say probably, it is. And statistically, you have an edge in buying those pullbacks and strong breakouts, right? So posted that on my Twitter. If you want the exact stats, feel free. You can go click on the tweet and read through it if you want. We have 14 minutes left. Anybody have any questions regarding current positions? If not, I'm going to end the stream early because I don't want to sit here and talk about nothing. Good call, Hanno. start opening up some Octobers. Hanno said he closed all of his Septembers today. And that's kind of what we've been talking about. But Callow, I'm assuming you opened up a September, right? Callow was looking at an $80 put in Baba. He wants to short it. We posted the chart in Discord. I'll post it one more time. The September makes sense on this short because his profit target is super close. And the Septembers were in the right wheelhouse for dollar amount. So yeah, that makes sense to buy a September in this case. For the rest of us, we are completely out of Septembers to the long side, or I shouldn't say that. I'm still in some Septembers. I know you guys are as well, but we are no longer opening up Septembers. Every single position we will open up to the long side from now on is going to be at the very minimum Octobers. There's only 30 days left in September, or until those Septembers expire. Do not hamstring yourself into getting theta crushed. If something consolidates for 5 days, you start sweating. Chart might be moving in your direction within the next 10 days, and you close 5 days out because theta starts kicking your ass. Don't put yourself in those positions. So from now on, it's Octobers only. Hanno closed all of those. Congrats for anybody watching the stream here. You can look at the trading view thing, but Hanno played AMD 3 separate times. He closed his last AMD position here on this breakdown of the symmetrical triangle. All 3 of those positions were in profit. So good job, Hanno. Okay, I'm going to go ahead and stop the stream. You did not miss PEP. We talked about it briefly, but I'm going to stop the stream so I don't have to talk about it again on stream. If you watched the stream, thanks.